Hello guys, welcome back to another video. So today we are going to do the weekly market breakdowns, and this week we're going to look at most GBP pairs as well as the Nasdaq 100, gold as well as US oil. Now the reason why we are looking at GBP in particular is because we had some positive fundamental data that came out last week for the GBP. Now without any further ado, let's jump straight into it. Now starting with GBP USD on the monthly time frame, what do we see? Now firstly, we can obviously see how the market has been quite bearish, and we can also see how the market had broken below this but is currently testing this monthly level of support. Now we can definitely expect a pullback in the market now, because we expect the GBP to increase in value against the USD. We can definitely expect this move to the upside to continue, for the market to go and potentially test that previous level of support there that got broken and is acting as resistance. Now from a weekly perspective, what do we see? Now here on the weekly time frame, firstly we can see how the market had printed this overextended information. After an overextended information, you expect a pullback to the left leg before the continuation to the downside. Now we can see that is exactly what the market had done. The market is currently testing previous support that is now turned resistance. So we will obviously need to wait for a clear break above that level there as well. Now if you drop down on the daily time frame, what do we see? Now from a daily perspective, the market is currently testing strong level of resistance. Now the best way that we are going to approach the situation is, because we're looking for buying opportunities, we're going to wait for the market to break a clear break above that level. Then on the retest, start looking for buying opportunities over there. If you don't want to measure how far the market's going to go up before it comes down, the best way to do that is by taking your Fibonacci from the low to the high and make sure that you got the 0.382 lining up perfectly with that structure. Now this makes a lot of sense here as well, because we have this level of support over here that got broken that will act as resistance as well. So this is how we are going to approach the situation. We're going to wait for a clear daily break above that level. Then on the retest, start looking for buying opportunities there as well. Next up, we do have Gbp Jpy. Now I have done this breakdown before when the market was stuck into this consolidation, but I think it's a good time for us to do an update. Now starting on the monthly time frame, what do we see? Now from a monthly perspective, the market is currently testing very strong resistance, but we can see how aggressively the market had moved to the upside. We also can see how the market had printed this massive impulse, and after an impulse you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the low to the high of this impulse. And we can see how the market tested and rejected the 38.2, which gives us an indication that the upward momentum is quite strong. So there's definitely a long-term expected target to the upside there as well. Now from a weekly perspective, I think it's quite clear the market had been stuck within this consolidation for quite some time, but I think we can definitely expect a breakout going into next week there as well, because we know that fundamental data drives the long-term momentum of the market and technical data drives the short-term momentum of the market. Now here from a daily perspective, what do we see? Now here on the daily time frame, excuse me, there's two things that we have to take into consideration. Now this over here was the structure that the market had created over here. Now the market is currently now testing strong level of resistance, and we got support there as well. Now the best way to approach the situation is for us to obviously wait for a clear break above that level, and then on the retest we're going to start looking for buying opportunities for the market to go and complete that impulse correction and impulse pattern as identified from a monthly perspective. Alternatively, we could potentially see the market pull back first to that level, then before starting to continue to the upside. So the best thing to do is wait for a daily close above this level. That will give you a confirmation that the market's ready to move to the upside. Now Gbp Usd has been very bearish, as you can see over here, but not because the GBP has been weak, but the AUD drives at the back end of commodities, and with the with the tension, the continuous increase in tension between Russia and Ukraine, that has obviously led to the AUD increasing in strength there as well. But we're going to do the analysis. So starting on the monthly time frame, there's two things we can see. The market is currently testing strong support. The market also printed this overextended W formation. After an overextended W formation, you expect a pullback to the left leg before the continuation to the downside. So there's a good possibility for the market to go and hit that level there before we could potentially see any continuation to the downside. Now here from a weekly perspective, we can see this was the last structure that the market had created. It gives us a confirmation that we can obviously expect the market to come and test that level before the continuation to the downside. If you look left, you can see the market printed this level of support over here in the market as well. telling us that we can expect a pullback first before the continuation to the downside. From a daily perspective, what do we have now? Here on the daily time frame, the price action is quite choppy because why? Firstly, we know that the market is now testing this daily support here as well. The last structure that the market had created was sitting at this level over here. Now, if we had to look for any buys on this market, we'd obviously have to wait for this support that got broken. It became a resistance got broken, support didn't hold. All of that support's now once again turned resistance. Now the best way to approach the situation is to wait for the market to break above that level on the retest. We can then start looking for short-term buying opportunities as well as long-term buying opportunities in the market there as well. Next up, we do have Gbp Cad starting on the monthly time frame. What do we see? Now from a monthly perspective, we can see this market has been trading sideways for quite some time, and the market is back to testing that level of support of the consolidation phase there as well. Now there's two questions: is support gonna hold or is it not gonna hold? But what we do need to do is we have to continue with the analysis because we expect the Gbp to increase in strength over the coming weeks there as well. Now here on the weekly time frame, we can see how the market had broken below this last structural level that I created over here. This level here acted as a level of support. It got broken. The market never came back to test it as resistance. The market also printed this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the low to the high. Now you can see how we got a 50% pullback to the previous level of support that is now turned resistance, giving us a confirmation that we can definitely expect a pullback to this level if we do need to see a continuation to the upside. Now we're going to use this as our long-term target in the market over there. Now the best way to approach the situation is you can see how the market is stuck within this consolidation phase, and the best way to trade this market would be for the market to give us a clear daily break above this level, and then once again on the retest we're going to start looking for buying opportunities for the market to go and hit that 50% Fibonacci as we identified on the weekly time frame. Next up, we do have Gbp CHF. If we start on the monthly time frame, what do we see? Now from a monthly perspective, we know that the market had printed a strong level of support over here. Support got broken, the market came back to test it as resistance, and the market is also currently testing support here that was once again resistance here as well. So you can see that this level of here acted as resistance. The market broke above that, came to test it as support. Support got broken and became a resistance. This resistance got broken and it's now being tested as support. But because we expect the Gbp to increase in strength, we could also see the CHF increase in strength there as well. So as traders, we always have to be reactive and not predictive. The market had also printed this W formation. Now after a W formation, you expect a pullback to the neckline before the continuation, and that is exactly what the market did here. We can see how the market tested and rejected the neckline there as well. Now if we drop down on the weekly time frame, what do we see? Now from a weekly perspective, the market had just completed the same formation at the neckline, which is a bearish pattern from a technical perspective. So based off the technicals, we should expect the market to continue lower, but the market had printed this candle with the long wick, so you can expect the next candle to go and fill in that wick there as well. So if you drop down on the daily time frame, what do we see? Now from a daily perspective, it seems like we've got another W formation over here, but the most easiest price action to read over here is just we have that level of support that got broken, that is resistance. The market also printed this impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the low to the high of the impulse. We can see how the market had tested and rejected the 0.50% Fibonacci level there as well. But the best way for us to approach the situation is two ways. Firstly, if the market does pull back to this level over here, then we can definitely start looking for buying opportunities from this level over here. Alternatively, if we can get a clear break above this level going into next week, then I'll be more than happy to jump in there as well. As traders, we have to be reactive and not predictive. We must learn to adapt to the ever-changing market environment. Also make sure that we get the best entries in the market there as well. Next up, we've got Gbp Nzd. That's also been very bearish. And if you go on the monthly time frame, you'll see that the market is currently sitting at a strong level of resistance. Now, this level over here acted as resistance multiple times, broke below that, became support, resistance, broke above that, came support, and it's once again being tested as support there as well, giving us an indication that we can definitely expect a slight pullback before the continuation to the downside. Now, from a weekly perspective, what do we see? Firstly, we can see how the market printed this massive impulse. Now, the market is heading straight for this level of support over here that we could potentially see the market go and test. But if we look left, you'll see that the market is also currently testing previous structures that it had created as identified from a monthly perspective. The market also printed this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the low to the high. Now we can see how the 0.32 is lining up perfectly with this level of structure that the market had created. Going into next week, we can definitely expect a pullback to that level before we could potentially see any continuation to the downside. Now here on the daily time frame, we've got the same kind of price action as the one before. Market is stuck within a consolidation phase. Now the best way to approach the situation is you can just buy the market from where it is now, no problem. That will just give you an opportunity to use a tight stop loss, or you can just wait for the break above, and then on the retest look for some buying opportunities in the market there, sorry, as well. Yep, so let's continue. Next up, we've got Euro GBP. Okay, so we've got the Euro GBP over here. Now the interesting thing about the Euro GBP is that the euro is currently being backed up by with the sanctions that being put in place there as well. But we're going to start here on the monthly time frame. Now here on the monthly time frame, what do we see? Now from a monthly perspective, the market is currently testing strong level of support. Now if you look left over here, you can see that the market was stuck within this consolidation phase from a monthly perspective. Now I've not been looking at Euro GBP for quite some time now, but we can see how the market has been stuck within this consolidation phase. So we can definitely expect, the euro to get weaker against the GBP as well. We can also see how the market had broken below this level of support, came to test it as resistance there as well. From a weekly perspective, what do we see? Now here on the weekly time frame, the price action is kind of similar to the one we have on the monthly, because if you do look left, you'll see here that all of the structure that was created, this was a support got broken, became a resistance, market broke below that, came back above, tested it as resistance, and we had that another rejection week there to the downside. But because we are looking for selling opportunities, that's exactly what we are going to do. Now here from a daily perspective, we can see how this market also stuck within the consolidation phase here as well. Now the best way, like I always say, to trade a consolidation market is to wait for the clear break below that level, and on the retest start looking for buying opportunities. So we're going to wait for the market to break below that level, and then on the retest start looking for some selling opportunities there to the downside. Next up, we've got the Nasdaq 100. Now the Nasdaq 100 from a monthly perspective that I've been speaking about for many times here, the market had firstly printed this information. After the information, you expect a pullback to the neckline before the continuation to the downside. So we can definitely expect the Nasdaq 100 to continue slightly higher before we see that move to the downside actually take place, because the market is still quite overbought. Now from a weekly perspective, what do we see? Now from the weekly time frame, the first thing that we need to identify over here is this was a level of resistance that the market had broken above. The market is also now testing previous strong level of is about to test a strong level of resistance that was one support over here. So we can definitely, going into next week, expect the Nasdaq 100 to go slightly higher and then start see that deceleration process take place there as well. From a daily perspective, what do we see? Now here on the daily time frame, the price action is quite all over the place, but if you look left over here, you'll see that this is the structure that I was referring to earlier. So we can definitely expect the Nasdaq to go slightly higher, pull back, then go continue this bullish momentum, because that's what a lot of people want to hear. They want to hear that the Nasdaq is going up. So that's what it would look like. Alternatively, if this level doesn't hold, then you just start looking for selling opportunities once you get a break below that level. Also, so it's always very important that you focus on the first move. Okay, so this is going to be the first point of reference to look at before you start looking for anything else on there as well. Next up, we do have gold. Now here on the monthly time frame, it's very straightforward, massive rejection there. Weekly time frame, the market is testing previous resistance as a level of support over here as well. We could see some pullback before the continuation to the downside or to the upside, depending on what kind of fundamentals we do have in place today. Here from a daily perspective, where the market print this information. After the information, you expect to pull back to the neckline. The market also printed this massive impulse. After an impulse, you expect a correction. And if you take your Fibonacci from the low to the high, we can see that the market had come to test the 0.382 Fibonacci level. But it's very important that we are reactive and not predictive. Now, there's two ways that we can trade the Nasdaq 100 as it stands now. Okay, so this is where the market's currently moving in now. So there's a good possibility for gold to go and hit that level there before the continuation to the downside. Alternatively, if this level does not hold from a daily perspective, then we can see the market break below that before the continuation there to the downside as well. And that's gold. Next up, we do have the US oil on the monthly time frame. Same price action as gold. The market had tested and rejected that monthly resistance over there. And then from a weekly perspective, what do we see here on the weekly time frame? The market had broken above this level of resistance, came to test it as support. So we can definitely expect the market to continue higher in the coming weeks. And from a daily perspective, we can see how the market is testing strong level of support. This level here acted as a level of support and it's now being tested as a resistance. So you've got a contradiction between the daily and the weekly. So because we're looking for buying opportunities, we're going to wait for the break above that level. Then on the retest, start looking for some buying opportunities. In doing so, the market would then also print this inverted head and shoulders pattern, which is considered a bullish pattern from a technical perspective. Now that's all from my side. If you enjoyed the video, please smash the like button for the YouTube algorithm. And as always, cheers for years.